Okay, so let me take this immense gratitude as well as pleasure to introduce our next speaker, which is Parth Thakkar. Um, Parth is a financial planner, certified financial planner, and he lives as well as advises his clients, I being one of them, by one single motto, which is invest to create wealth, not to make money. So that is an interesting motto. There is another motto I think Parth recently gave. I heard this motto, which was, what was the motto, Parth? There's one more motto you have shared.
I tend to give a lot of mottos. Which inspired you the most? You tell me.
I think the second motto was more or less invest to create. People don't fall in life. People don't
Yes,
fail in life. They fail to play.
Yes. So the second one was that people don't fail to people don't plan to fail in life. No one plans to fail, right? Who would do that?
Yeah.
But people simply fail to plan. They don't have a plan in place.
Yeah. I think Himanshu might relate to this a lot more than me, because Himanshu is the man with the plan. But either ways, he's a certified planner, which is Parth, and a QPFP, which is what?
Qualified personal finance professional.
Okay. And he has built his reputation, and in his list of clientele, he's part of his company, which is Phoenix Insurance. And Phoenix Insurance, I have been also part of. He heads at Phoenix Insurance and Financial Services. He leads a team that manages the portfolio of, I think, more than 1,200 clients. And this company is 20 years old. And I think this company has all the clients pan India, and they provide excellent services, I feel. It has been seamlessly integrating various financial principles, financial planning principles to meet to Indian context. So guys, whenever you go online, you see people who are giving you finances advice, etc. These are more centric to globally making sense, but Parth has a more perspective towards Indian way of financial planning. Then that is about Parth. So let's welcome Mr. Parth as he explores us in this in our technological age, as well as how can we manage our financial financial side of things. So stage is all yours, Parth. Go ahead.
Thank you so much, first of all, for giving me this opportunity. Before I begin, I would like to thank Dr. Pradyumna for explaining so well. Even I've taken so many notes. And I think when we started the meeting, Ritesh asked a question that what was your resolution on this Independence Day? I think after listening to Dr. Pradyumna, I've made at least 2 resolutions. One is to make sure that I give a specific slot to when I'm using the social media. And second is that to take my girlfriend on a monthly movie date. All right. So, Ritesh, can you just give me a check if it's visible properly? Can you see it properly?
Yes, we can see artificial intelligence and behavioral science, finance.
All right. So, the topic probably has 2 terms: artificial intelligence and behavioral finance. And I believe both of these terms are largely misunderstood. So, let me first try to deconstruct these 2 terms. So, a lot of people tend to say that you must have seen a lot of ads on social media or on television saying that they claim to use AI in this, we are using AI tech in this. So a lot of times what I've seen is that people are using algorithms. They are not using AI, but they tend to mix up both these things. And let me try to tell you that what is the difference between using algorithms and using AI as in tech in your product. See, algorithm is something which is very rigid. It is just a set of instructions, a pre-coded recipe that gets executed when it encounters a trigger. AI, on the other case, is something beyond just an algorithm. AI will take in data, AI will analyze that data, and if required, AI will also modify the algorithms in response to the data and try to upgrade itself, process that information, and then give an output or a result. So a lot of times people use this catchphrase that they are using AI, but they are actually using algorithms. AI and behavioral finance. Now, when it comes to finance, or let me say behavioral finance, a lot of people, when they talk about behavioral finance, they try to say that behavioral finance is something which is only about handling the emotions or managing the emotions of the client. I believe it goes beyond that, and I'll come to that in a moment. But I think this particular slide would explain behavioral finance in a better way. Unpleasant truths versus comforting lies. In finance, it's easy to see the data, see the historical data, and see where people have made mistakes in the past. You can also analyze the data of the stock market and actually see people making behavioral mistakes. For example, if there is a market crash, people tend to sell the shares at a lesser price, right? Now, this is, I believe, this is not something which is very wise thing to do. This is not something which is very intelligent thing to do. But people tend to do it. Now, why do they tend to do it? And this is one of the examples which is the most used. But later on in these slides, I'll also tell you what are sort of the other examples when it comes to behavioral finance. At this point, I would like to tell you that if you have made such mistakes in the past, can you just reply sold, SOLD, sold? If you have sold when the market crashed, be it the COVID crash or maybe 2008 crash or 2013, can you just reply on the chat box sold so that I get to know? And I think I'll be one of the people who also gets to write that. In the past, I've also made some such mistakes, so it's not uncommon. There is a very famous book for all the traders out there. If you are into trading, I believe there is one book which you should read, which is Trading in the Zone. Now, this book will, apart from all the technicalities in the trading, this book will also focus on the mindset, which Dr. Pradyumna covered in the topic before mine. Mindset is very important while trading. Your behavior is very important while you are trading in the zone. This particular screenshot is from SEBI's report, which mentioned that almost 90% of traders are losing their money in the stock market. Ritesh asked me a question sometime back that, what kind of changes or what kind of improvements do you feel the tech in the tech industry in India should happen? Now, I believe that there is lots of technological advancement which has already been done. People are not making losses because there is some sort of a loophole in the technology. It's not that you're placing an order and it's not getting executed on time and you're making losses. No, the tech is fine. It's get executed in real time. It's also not the case that the information is not readily available. Tech has done a wonderful job. I think it has democratized the information. You get lots of charts, analysis, regular updates on news, push notifications on your mobile phone. So it's not that there is an information parity, that you're not able to take the right decision because there was lack of information and that's why you're making losses. No, the tech has done its role. It has given you information. It has given you access to software. You can do the transactions in real time. But even then, people are making losses, right? So who is to blame? What is to blame? Why are people making losses? The answer would be the behavior of people. There is another advancement which has come when it comes to fintech companies, which is a very catchy phrase again, robo-advisory. Now, I'll try to deconstruct what robo-advisory is doing right now. And once we actually start seeing the application of artificial intelligence in the products of fintech companies, how can robo-advisory take shape in future and why that is actually need of the hour also. So there is something which is known as the modern portfolio theory, and most of the algorithms are attuned to this theory. Now, MPT will try to take a survey of the investor, try to put it into a category of risk, be it a conservative portfolio, be it a moderate portfolio, or be it an aggressive portfolio, right? Then it'll try to select a bunch of securities, optimize the return, and map the securities into these categories, be it conservative, moderate, or aggressive. So this is what is happening right now. And now I'll try to explain where is the scope of improvement and how can AI come into picture and how can it improve our lives for the better in future. This is something which we should be hoping for, at least in the near future. Individualization of robo advice. There are many companies which have robo advisory service right now also, but the robo advisory service is more generic. It is not attuned to your personal biases which you have against the market or your personal requirements. Now I believe when AI comes into picture, we will have a scope to give personalized financial advice to individuals. What I've highlighted here is that there are two sets of portfolio management. One is what I told you initially, which is the MPT, modern portfolio theory, right? And right now that is the one which is used mostly, correct? But with the recent developments in AI based machine learning, we see that there could be a shift to behavioral finance, and maybe we can incorporate strategies which not only optimize the returns of the securities in the portfolio, but which also optimize the behavioral response of people to the market reactions or to whatever is happening in the market. Right now, there is no way to optimize the behavior of the investors. I believe with AI, maybe we can do that. Possibilities of using AI in finance or portfolio management in future. AI-based systems might identify a complex but predictable relationship between financial leverage, interest rates, and operating margins. Even though we have a lot of data right now with us, we are not able to connect the dots because the problems are complex. There are no direct relationships between two parameters. Probably there are some indirect relationships which need some sort of a ML model to be analyzed. So I think if AI comes into picture, maybe we will be able to predict or forecast what will be happening in the future in a better way. We have the data in place, but we just need a better way to interpret that data. Second, right now what we have is that we have fund managers, investment managers who have their strategies to manage a portfolio. Like I explained earlier in the example, you have been assigned a conservative risk assessment or a moderate risk assessment or an aggressive risk assessment, but that portfolios are not managed by any tech. The portfolio management is still involves human element to it. Now in future, there might be a possibility that we can actually replicate a fund manager or an investment manager using AI. This is some of the data which I had just collated. I've given the source of the paper also. So if you see that the range, I would want to focus on the range of services. These are the existing products which are available under robo advisory in US, and US is a more mature market. So I've taken examples of US. Automatic rebalancing, tax loss harvesting, single stock diversification, fractional shares. Now what is happening is that whenever you create a portfolio, you need to do asset allocation. You have to decide that so much percentage of my corpus will go into equity, so much into debt, and probably 5-10% into gold or some other commodities. But equities will tend to wherever the market is right now, 5 years down the line the market will be higher than that, right? So let's say if you have allocated 50% to equities right now, 5 years down the line, automatically, because the market has performed well, that 50% might turn to 65% or 70% or whatever it is. The idea is that whenever you are doing asset allocation, you need to do rebalancing of the portfolios. Now, this is something wherein the tech can come in. It has already come in, and you can do now automatic rebalancing. The other part is tax loss harvesting. AI is already at I wouldn't say AI rather, this is some algorithm. So the tech is already at a level wherein we can assess the securities which are in loss. We can also assess that how much of these securities need to be sold off so that we get some tax advantages, or we can set it off elsewhere. These are the things which are automated, which could have been done manually also, but this is more accessible to public, and this also increases the speed. So right now, when you hear robo advisory, it is not advisory per se. They're using the term advisory per se. No doubt it adds a lot of value, but these are the sort of services which they provide to you. And this is what I wanted to highlight, that these kind of services is what you get in a robo advisory. Now, let me come to the topic wherein I try to highlight that what are the kind of things which even robo advisory services cannot provide, and where there is a scope of AI to come in and actually position itself so that it can take robo advisory to the next level. Number one is that the survey in which the way in which people are doing the survey, that needs to change. There is a good line. If you read the last line of the paragraph, this is one of the research papers. They mentioned that the AI looks like a Tin Man in the Wizard of Oz rather than R2D2 in Star Wars. So the name sounds very interesting and very intelligent right now, but it is not. The tech is not as matured as we would like it to be. There is one more interesting concept which came to my head. Should we call it artificial intelligence or should we call it artificial wisdom? Because I believe that we need wisdom to make the right decisions. Intelligence alone will not help. All of us know the facts and the figures, but we fail to act upon it. So I'm not sure if AI can solve the problem, but let me ask you these questions. Can AI convince you not to buy a second house for investment purpose? A lot of people make this mistake. Can AI convince you not to panic when there is a market crash? Can AI convince you not to chase extraordinary returns? Can AI convince you that inflation is a risk and volatility is a friend? Can AI convince you to prioritize your retirement over your kids' educational expense? I believe intelligence is something which can analyze and give you a report and process that data for you. But the key lies in wisdom to act upon that data. Do we need AI to solve this problem or do we need wisdom to solve this problem? Only time will tell. But this is the value proposition. If AI is able to successfully optimize the behavior of investors, if you see what kind of value proposition financial advisors like me have in your portfolio rebalancing is up to 0.4%. Behavioral coaching is up to 1.5%. Implementation of advice is up to 0.9%. Tax advice is 0.2%. So total value added in the returns which you are getting over a long period of time under the mentorship or under the advice of any financial planner is 3%, out of which the major chunk goes in behavioral coaching. If AI is able to optimize the behavior of investors, then I think it stands a chance to revolutionize this space, but only time will tell that. Feel free to ask any questions. This is Parth Thakkar from Phoenix Insurance and Financial Services. You can take a screenshot of this slide. My mobile number and my email ID is mentioned. Also, you can follow me on Instagram. I go by the name of Partha Shastra, P_Artha_Shastra. So, yes, Ritesh.
I think that is a very interesting and very nice Instagram name, I should say.
Thank you so much.
Yeah. So I think Parth, I have a couple of questions.
Yeah.
Should
I just turn off the screen share?
Yes.
Just give me one second.
Yes. So if you guys have any questions, do comment in the comment box, in the chat box. So Parth, I have a couple of questions now that so there is a question from Itika here. Okay. So we'll take up that first maybe. And I don't know if it is related to your topic or not, but how does AI improve fraud detection and security in financial transition?
I think all the legal professionals use this thing that if they don't want the other person to find the flaw or the counter argument, they try to bury the other person in data. Right? By the nature of the financial transactions, you have a lot of data when it comes to finding a fraud or in any of the transactions, right? It is very much possible that the humans take time to process through that data, or they tend to miss out on certain things. I believe AI can do a very good job in processing that data, finding out the anomalies, if any, in the patterns, and using that, I think you'll be able to detect the frauds in a better way.
So we have two more questions, Parth. We can quickly take them. One is,
Yeah.
how does AI improve? No, sorry. How can AI help in behavioral counseling in future?
Right. So I think this is something which I stressed a lot during my presentation also, on that AI should be able to optimize the investor behavior. Now, how do you actually do that? I believe that the surveys which we are doing right now are more basic. We are just telling that, are you, would you like to lose so much money in the next 3 years, or are you comfortable taking so much risk? I believe these are very primitive surveys in order to assess the risk taking capability of any investor. Maybe if we are using IoT or AI in future, this is how I would imagine the risk surveys can happen. Imagine you're sitting in front of your iPad or your laptop or something. You're wearing a smartwatch, right? The video camera is on. Video camera is tracking your facial expressions, your eye movements. Smartwatch is tracking your heart rate, your pulse, and everything. And then on the screen, you are actually being shown the headlines of market crash, or you are shown the actual movement of the stocks, right? And then you suddenly see a crash, or then you're given certain scenarios, and you try to react to that, and that reaction is being captured and processed by some sort of a model, on the basis of which your risk is being assessed. So I think that is something which we can do. Risk assessment is very important, and I think AI can surely help in that.
Okay, so I have a small question. So this is regarding risk appetite of the clients.
Right.
Okay, how do these robo advisors uh, assess the risk appetite of the clients? I mean, how would, I mean, they can ask questions, etc., but I'm sure there are ways beyond that.
Right. Absolutely. Absolutely. So what robo advisors tend to do is that, they'll have some questions like, what is your age, right? When do you plan to retire? What is your past experience? Have you lost money in the market, or where do you try to invest more in equities or in debt? So they have such things, and they try to take assessment based on that. So this is what they are doing. Now, what I have in my mind, it's an imagination right now, but it's more sort of an immersive experience. Like I mentioned in my first answer, that you have this smartwatch, you have this table, laptop and tab, and on which you are shown things. Imagine you are also somehow using Midjourney or something, and you are also being shown how you will look in the future. They show you how you are aging. They probably try to show you a future family. They try to show you the kind of wealth you can create with a particular portfolio, right? They also uh, try to show you the risks which you are taking, but using a more immersive experience. So I believe this is what the robo advisors are doing right now, which is simply a MCQ question wherein you can just mark ABCD and get it done with. But I believe with AI we can track the actual behavior or the sentiments which the client is going through.
Yeah, yeah. Such an interesting concept, I feel, that, just asking the question, instead of just asking the question, you actually capture the way they are responding, other than the question answer, by probably their eye movements or their general facial expressions and other parameters, wherein then we can actually assess, how much risk appetite do they really have, instead of just relying on the question. A lot of times, people do answer questions in certain ways, but their real answers are quite different. Very
That's
interesting, very interesting. Okay, great. So I think great, Parth. It was a great session. Very aptly explained, quite technically explained. Though I should point out, I'm sure a couple of people might need a bit of financial know-how, foundational know-how, to actually understand the real crux of what Parth was trying to say, and also it was very, very, very related to what tech that we do it. So this small session of Parth was more directed to people who are interested in finance, people who are techies who might be looking for a new product, and this might be their new product idea.
So I think my target audience was you, Ritesh.
Maybe, yeah. So that being said, I think Parth, thank you so much for this amazing session that you took, and I would like to thank you so much in generally also helping me out in a lot of financial questions, as well as doing these small sessions with my team as well as me. Thank you so much.
Thank you for the opportunity.